What's up, traders? I'm back again today with another banger, and in today's video I'm going to be showing you how to spot the difference between liquidity and inducement in the market. So there's this group I am in on Telegram. Someone entered a trade on GPJPY today, and he entered from an inducement level and got stopped out. So he was just trying to find out why. That was when I just said I'll do this video and share with you guys so that you not fall into the same trap, because I've also fallen into something like this before until I got to find out. So now let me open up a chart, GBPJPY. Let me open up GBPJPY. So if you're asked what is liquidity, liquidity is simply money. It's simply areas where there is money in the market. You can find it anywhere that there is a reversal in the market, anywhere that market reverse from, or anywhere that market change direction from. Like look at this zone over here. This place over here is liquidity. You can see it everywhere in the market, because the market needs liquidity to be able to move. There's liquidity here, there's also liquidity here, there's liquidity here, there's another liquidity here, there's another one here, and you can find it every turning point in the market. That is where you can find liquidity. Then what about inducement? Inducement, I would say it is a trap. It's a trap for both buyers and sellers in the market. Inducement is something that will force you to do what you're not supposed to do. Maybe you're supposed to buy from another zone, but the inducement will force you to buy from a zone that you're not supposed to buy from. The same thing applicable to selling. You understand? So looking at this chart over here, the market went from this particular zone over here, this place here, all the way up to here, and retraced a little before breaking to the upside, meaning that market has not taken out this liquidity here. Market has not taken out this liquidity here. But as SMC traders, you don't see break of structure for here, and you've seen this zone here. The market use this zone to break the structure at the top. What we normally do is you just set your entry over here like a limit order. Since you saw the entry on the 15-minute time frame, you just set your entry over here, pending order, and buy to this place, this point here. Eventually the market will just come back, stop you out, and start going to the downside, forgetting that market has not taken out this liquidity below here. Market has not taken out this liquidity. So why then did you place your pending order here? You see, that is why waiting for confirmation is very, very important in the market. It is very, very important. So here is another example of what an inducement looks like. If you should see something like this, let me go to a clear chart to show you an example. If you should see something that looks like this, looks like the market is ranging, or maybe even a ranging market, is also an example. Something like a double top like this. If you should see something like a market just broke this low here to the downside like this, don't worry when I set your entry at this level here, using this place as your order block. Most of the time market will take out this your order block. Most of the times market will take out the order block, because there is liquidity resting above this place, these two highs here. The market needs to at least take it out, then after taking it out, maybe you can start coming back down or start going back to the upside. You understand? That is what I've seen most of the time. Most of the time, if you just set your order block there and place your entry there, market will take you out and come back down. You can't feel like say maybe you get everything you do wrong. The only reason why you got stopped out is that you entered from an inducement level. So this is another example. Let's say the market is ranging, came back down here, went back up, came back down, went back up again, and just suddenly broke to the downside. It can happen both to the upside or to the downside, anywhere it broke out to. Some of us will place our order block around this level at the top here, and we are forgetting that liquidity is resting above this place, this three top here. Liquidity is resting above this place, and market needs to take it out before coming back down. So sometimes this is what you will see after you've entered from that zone. Sometimes you will see something like this. The market will come back, break this order block, and reverse back to the downside. and sometimes it might also break the other block and retest and start going back to the upside. So it is because you entered from an inducement level. Don't think say again juju way they do you. Let us see an example on a chart. If I should open, I think USD CHF, something like that is here. Looking at this chart here, looking at this chart, you can see clearly. Normally, you're supposed to place your order block somewhere here. Because of this high, you're supposed to place your order block somewhere here and enter this trade using this order block here. You're supposed to use this order block to enter this trade. The market did something like a double top before it broke to the downside. So for you, you're supposed to use this order block at the top here, because this is the order block that caused the break of structure to enter this trade. Then what then happened? After setting your entry here, somewhere around this area here, you started noticing that market has started ranging. Instead of market to go in your direction, it's just ranging. And the next thing, market went up, boom, took out your stop loss and came back to the downside. It is because this place now, it is an inducement level that you entered from. You need to wait for market to take it out before you look for maybe a market structure shift on the smaller time frame and enter. That is what you're supposed to do. Go over to, let's say, the 5-minute time frame and see if you see something like a market structure shift there on that zone. And if you look clearly, you will see this move here. This is clearly a market structure shift. Let me mark it out. If you see something like this, like this, like this, and it broke, this is a market structure shift. What you're supposed to do is just to draw your zone, draw your order block somewhere around here, and wait for market to come back and retest, just like it did over here. Wait for market to come back, retest your order block, and after retesting your order block, you're supposed to place your entry somewhere here. Since you are selling in short position, so you just place your entry here. You put your stop loss somewhere above this order block and place your take profit at the last 15-minute low, which is this one over here, which is exactly 1:4, I guess. Yeah, 1:4. That is how I trade. Most of the times you make this mistake, you go this in a small something. Just look at this thing I'm saying. Just try to look at it on other charts to see whether this thing that they talk they normally happen. If it normally happens, then just look for a way to adjust the way they take enter your trades so that you minimize the amount of losses you're making on your trades. That is exactly how to spot the difference between liquidity and inducement in the market. If you see things like this, don't be fooled. Make sure, say, look for that place where market never mitigates. You understand? Anytime you see a zone that market has not mitigated and it went all the way up, created the let me say a pullback and broke structure, no they to take that other second zone too serious. Make sure you look at the first zone very, very well. You understand? Make sure say you focus on the first zone very, very well. It is only if you see a solid confirmation on this second zone here, that is when you're supposed to be entering for a buy. You understand? But if you don't see solid confirmation for this place here, there is no reason for you to buy from here. Just wait for the market to get to your point of interest. Patience. Now one thing we say, if you don't get that patience, bro, the kind of money you go lose for this market. You say if you go this in our village, people they do you. So that is all about how to identify liquidity and inducement in the market. Please do well to like, subscribe, share, follow, depending on where you're watching the video from, so that you can be able to get more content like this from me.